Hey, Mark from Caliber. So I just want to do a quick audio on what the market looks like. So you can see on this chart that since May 12th, the price of the bonds have been pretty much in free fall. So remember that the price of the bond moves in the opposite direction as rates. So as the price drops, the rates go up. So we've topped out over 7% again for the first time since probably March. Um, so it's a combination of there's a combination of a lot of factors. A big problem is the debt ceiling and the inability to get that resolved anytime soon. And even though most of us believe that it will be resolved before June 1st, the markets aren't reacting that way. So they're kind of looking at a worst case scenario. And because of uncertainty, rates get pushed up. That's pretty much always the case. That and combined with there's still some pressures on banks, and this isn't helping because again, a lot of banks hold a lot of bonds in their assets, and as the price of the bond goes down, uh, as rates go up, the price of the bond goes down and erodes their asset value. So that's a problem for the banks. And then some of the information that came out this week, the economic information was not quite as bad as we expected it to be. So remember that good news on Main Street is bad news for bonds, and vice versa. And the Fed just can't stop talking. We still have Fed chairs that want to keep raising rates. There's a couple of them that either want to pause or not even have a meeting next, just skip the meeting altogether. And then there's other Fed chairs that want to continue to raise rates, at least in the near term. So it's kind of playing havoc with the bond markets and with rates. The 10-year didn't really move a whole lot today, but it's up for the week. And then, as you can see on mortgage-backed securities, hasn't been a good week for a couple of weeks now. So just want to keep you informed. I think once we get past the debt ceiling issue and some of the numbers are going to come out in June, the CPI numbers we think are going to be lower. That should help out, should start to bring rates down a little bit more. But it's always a day by day affair. So just keep up to date. Have your clients make sure your clients are keeping up to date with their lenders. If they're pre-approved, they should probably reach out and say, I know rates have gone up a little bit. Am I still pre-approved for the same amount at the higher rate? So just to make sure that all their ducks are covered. So any questions about anything, give me a shout. Talk to you later. Have a great weekend.